again to everyone joining us. We have over 200 participants today who are slowly coming in. So we're going to kick off today's session, which is our very first CCI regional webinar in partnership with Mazars on transfer pricing and international tax. So for those of you who have already come in, thank you very, very much for joining us today. We're going to allow just a few moments just to slowly allow everyone to come in, and then we're going to get kick started. Just in the meantime, if I can ask, because of the format today, we're in a meeting format, if you could just please mute yourself and just switch off your camera just for the beginning, just to avoid any sort of static or background noise, so that we can have full concentration on our Mazars experts, as well as all our CCI directors and the relevant business chambers as well, who are represented here today. Once again, a warm welcome. I see quite a few of our members coming in from the South African side, and of course, a lot of new faces. So welcome to all of you. If you're joining us from around Africa, all in the Middle East, it's an absolute pleasure to be able to host you today alongside Mazars South Africa. So we'll just give it a few more moments before we start today's proceedings formally. But a warm welcome to all of you here today, and thank you for participating. Okay, perfect. I think we can get started. We have most of our participants here today, so I'd like to formally again welcome all of you here today, and welcome to our very first exceptional and first CCI regional webinar in partnership with Mazars on transfer pricing and international tax. I'm Amy Ashworth, the General Manager of the French South African Chamber of Commerce and Industry. It gives me great pleasure to be able to preside and lead today's session, and also to represent the international or the global CCI network of more than 124 chambers worldwide, and particularly 22 in Africa and Middle East. So in today's regional collaboration, we are joined by the French chambers and some business clubs, as well as the Mazars offices based in Abu Dhabi, Botswana, Dubai, Egypt, Ghana, Kenya, Mozambique, Nigeria, Qatar, South Africa, and of course, Tanzania. So I think this long list is really attributed, and I suppose has urged us to think that COVID is, not only encourage us to think of new ways of working, but particularly for us, the great necessity to really pull together our collective resources, knowledge and expertise in order to navigate these very, very difficult times. So it's my great pleasure today that we have Mazars helping us to do this. And of course, they are our main event, our main partner on this event, and will be lending their regional expertise across Africa and Middle East today. So I must, of course, thank, we have Sebastian on screen as well. So I must, of course, thank very much Mazars, not only for their support that they lend across Africa and the Middle East in terms of the services and knowledge that they provide to our respective members, but of course the support that they do in turn provide to our chambers and our business communities. And really it allows us through their support to continue, particularly during these difficult times, to really provide the business connections that we need as chambers. So thank you very, very much to Mazars for lending their expertise today, and of course their support in general. And I think it must be noted as well, I'm very happy that we are able to host this event today, and I think it is one of Mazars' first events with their new global branding. So congratulations. I hope you've all had the opportunity to see the new logo. I know it's been many years of hard work, so great to have you here today, Mazars. So just a couple of formalities before we kickstart today. So just to run through the agenda quickly, we're going to have in part one, a presentation on transfer pricing. So this will be a general presentation with our Mazars expert in South Africa, who is Charles Hall, and he's a tax consulting senior manager for Mazars South Africa. So he's going to give us a quick presentation followed by a question and answer session. So please, all of you here today, as always, we encourage you to get involved and really lend on the expertise that Mazars is offering today. So please, you can ask your questions in the Q&A box or in the chat box located below on your screen. So please do throughout, whenever you have a question, just submit it, and we will get to it in the question and answer session. Following this, we will be moving to part two, which is going to be our country-specific presentations and opportunities for engagement with the country-specific Mazars expert. So at the beginning of the webinar, you would have registered for a specific country, and then we will move in part two into breakout rooms where you'll have more of an informal opportunity to engage with the country expert from Mazars on that one. So as always, please, we encourage your involvement and your questions. For the beginning of the session, if I can just remind everyone to stay on mute and put your video off, just to make sure that we have full attention on the expert and to avoid any static or technical issues that may arise. And following from that, we will hopefully have fruitful discussions and lots of business connections that come out of this. So thank you very, very much. So without further ado, I'd like to kickstart part one. And to do that, I'd like to call upon Sebastian Duplass to give a brief word of welcome. He is a director at Mazars South Africa and is also, in fact, an executive committee member of the French Chamber in South Africa. So thanks very much, Sebastian, for putting this together with us, and I'll let you have the floor.
Thank you very much, Amy, for that introduction. And I would like to start first by saying welcome to everyone in that webinar today. Bonjour à tous pour ceux qui parlent français. And a big thank you to the French Chamber of Commerce Network and French Business Association. I think all of us, all participants today, we know the work you do in each of the countries, the quality of your events, the support to each of the companies that you are bringing, the technical answers that you can bring to all of us when we have. You often do more than what is asked to you, and today we have a proof you answered a crazy challenge when we came to see you a few weeks ago and not so long ago and asked, do you think we can do an event with 10 countries? Immediately you said yes, Amy, in South Africa. All of your colleagues from other countries said yes, and for that, all of us, I think, can say a big thank you. I highly recommend each of the company to come to see you more often, to talk to other business in the countries. We want that network to grow more and more. Big thank you for that. And we are very proud as Mazars to be part of that first event that you do at Africa Middle East level. Really proud because of the quality of what you do. Now I'm changing my hat from a participant to a Mazars partner. So with my second hat, I would like to say thank you to all my colleagues from all the 11 countries for their work. It has been quite a challenge to organize that conference today. Thank you very much. I just want to say, and I will conclude here with one word. What is Mazars? Mazars is integrated partnership. And I think this is where we make the difference. Integrated means that there is no Mazars Botswana, Mazars South Africa, Kenya, or Brazil, China, France. We are all Mazars. I'm a partner in South Africa. I'm a partner with my colleague from Botswana or from China. We are all working together, and I think we are proving that today one more time. And we are working more and more on specifically our Middle East and Africa French desk for you, for French companies. And this is the first event of a lot coming in the future. Thanks again to all my colleagues, to my partners, and Charles, I leave you the floor. Thank you very much.
Thanks very much, Sebastian. So now with the formalities over, we can get right to what you came for today, which is tax, everything related to tax, but specifically a first presentation from Charles Hall, who is a tax consulting senior manager at Mazars South Africa. And he's going to be presenting or chatting to us about transfer pricing. So I hand over the floor to you, Charles.
Thank you very much for that. Sorry, just excuse me for a second. I just want to get everything ready in terms of just the sharing of the screen. So I just want to get that on. All right. Is everyone able to see the screen at the moment?
No, Charles. If you can maybe
sorry,
just try to reshare.
Give me 1 second. Okay. There we go. I believe it should be on there now. Is that on there at the moment?
Perfect. Thanks, Charles.
Perfect. All right. Good morning, and thank you for joining us on the session today. So we're going to kick it off with a transfer pricing session. And the point of view that we want to take with the transfer pricing session is really a focus on South Africa, with a focus on some key Africa countries, and also then some movement from a transfer pricing perspective from a Middle East region as well. So there was actually a very interesting article about a year ago where it was indicated that a couple of years ago, very few Africa countries had transfer pricing regulations or had transfer pricing applicable. So what has happened from there is we sit now with a situation where there's about 4 countries in Africa that don't have transfer pricing legislation, or that are not looking at transfer pricing at the moment. So at the moment, internationally, it's a very topical part of tax. It's a very topical thing that's being looked at by revenue authorities. And we see a lot of movement coming through from a lot of the countries in the Africa region. So with that being said, I'm going to start off with the overview in South Africa. And this is purely because a lot of the movement has been from a South African perspective. And what has happened from there as well is in South Africa, we've had a lot of regulations and a lot of guidance that's been issued in respect of transfer pricing. So in South Africa alone, we've had our transfer pricing legislation in place since 1995. But it's really the last, I would say now, 4 years that there's been a real movement in respect of transfer pricing from a South African perspective. We see a lot more scrutiny by the Revenue Authority. We see a lot more questions being asked when tax returns are submitted. And we also see a lot more requests for information coming through where the Revenue Authority is looking at transfer pricing, not just from a current year of assessment perspective, but also doing that from a retrospective position as well. So just to start it off, we have our transfer pricing anti-avoidance provisions in Section 31 of our Income Tax Act. And that really just stipulates when you do have a transaction to consider from a transfer pricing perspective and how you are about, or how you should go about looking at those transactions. Then just on specific regulations and specific guiding documents that we have a specific regulation that's been issued in respect of country by country reporting. And we also have a specific regulation that has been issued in respect of the master file and local file approach. So this together is what the OECD referred to in BEPS Action 13 a couple of years back in 2015, when they released the report for the 3-tiered approach to transfer pricing documentation. So in short, a country by country report is really about a 3-page report that provides a snapshot of an entire multinational group. It contains information as to country of operation, revenue that's being generated in the countries, taxes being paid in the country, and the overall position of the entities within the various countries. Then the more detailed transfer pricing documentation is the master file and the local file. And from a content perspective, South Africa has adopted the full approach as what was set out in the OECD guidelines. So I'll get into the requirements for the mandatory master file and local file in South Africa just on the next slide. But here the master file, again, is a bit more of a detailed document. And that provides some further information on the group itself, the group structure, how the group operates, and it also then gives a high-level overview of the group transfer pricing policies. Now, a master file that's normally prepared by the headquarter entity or the ultimate parent entity of the group and shared across the group. The local file is what was previously known as the transfer pricing document, if I can put it that way. And the local file is really the document that unpacks the local South African business and all of the related party transactions that it has with cross-border related parties. It would also include your economic analysis, your benchmarking, your motivation for your transactions, and then the arm's length conclusion for those transactions. In addition to that, we have a document that's been issued in South Africa containing information where or stipulates information that should be kept on hand and be made available in the event of an audit or an investigation in South Africa. So it does not have to be submitted with the corporate tax returns, but it has to be kept on hand. And I'll then touch on that document specifically also in the next slide, where we deal with the mandatory requirement and the threshold from a South African perspective. The Revenue Authority also issued a business reporting requirement specification document, and that document really just takes all of the different requirements from a transfer pricing perspective together and puts it out in a bit of a practical approach. So in South Africa also, the tax return disclosures has been significantly enhanced from a transfer pricing perspective to set out various information. The country by country reporting, if that is met, then that's also been incorporated into the corporate tax return and is part of the disclosures in there. So the CBCR requirements that would go into the corporate tax return, that is only if I have a South African entity who's part of a multinational group, but it's not the entity responsible for the CBCR submission. If it's responsible for the CBCR submission, there's a different disclosure that has to be made on the Revenue Authority portal for the submission of returns. Then penalties and interest at the moment, and we'll touch on this when we get to the next slide as well. There is no penalties and interest at the moment for non-compliance in terms of the documentation. The only instance where there will be penalties and interest if it is a South African headquartered group meeting CBCR requirement and also meeting master file and local file requirements, then penalties and interest for non-completion of the documentation would be applicable. Having said that, even though there's non-compliance penalties for the documentation, penalties and interest can still apply if there are transfer pricing adjustments or considerations to be made by the Revenue Authority from a transfer pricing perspective. Right. Then we have various practice notes from a South African perspective. A lot of them are outdated and has not been updated for quite some time. We don't have any clear indication at this point in time as to when those would be updated from a South African perspective. And where this particularly becomes difficult is in respect of thin capitalization and also funding transactions. So thin capitalization was repealed out of the Income Tax Act in South Africa in April 2012. And since then, we haven't really had any further guidance as how to deal with funding transactions from a transfer pricing and an income tax perspective. There is been an indication that something is being worked on, but something is still to be published and to be set out for consideration. So at the moment, that is still a very tricky area to deal with from a transfer pricing perspective in South Africa. What we do have an indication on, and National Treasury issued a document for consideration on this with the budget speech this year in February. However, given the COVID-19 pandemic, the implementation of that has been moved on with a year, and this will come into effect in South Africa on 1 January 2022. is the indication. And this is the interest limitation rule. And what this basically follows in broad terms and just as a summary, under the BEPS program that was set out, BEPS Action 4 dealt with the limitation of interest deductions, and there was an indication there of the 30% of EBITDA rule. So this is the approach that's currently being considered from a South African perspective, and like I said, that is still then to come into effect. Then in South Africa, we had our first transfer pricing case. The case is about a year, just over a year old. And this case was the Crooks Brothers versus SARS. And what we have from a South African perspective is in Section 31 of our Income Tax Act, there's two provisions, Section 31.6 and 31.7, which if the criteria of the section is met, it takes out of the consideration from a transfer pricing perspective, funding transactions, and 31.6 can also take out certain IP transactions because of that. Okay. So what happened in this case with SARS is the taxpayer had various agreements for the funding transactions. However, in terms of 31.6 and 7, like I said, there's very specific criteria that needs to be met. So the agreements was actually contradicting the requirements of the sections, and the taxpayer argued, but that the section can find application, and SARS at the end of the day said it cannot. So the taxpayer lost that case in the end of the day, and those transactions were subject to the normal transfer pricing considerations. All right. So if I move on to the next slide, and this is just a summary of the mandatory requirements from a transfer pricing perspective in South Africa. So what we do have is various scenarios. So I'm just going to summarize them from a high level perspective. If we have a South African headquartered multinational group, the consolidated turnover of the group is in excess of the 750 million euros for CBCR reporting, 10 billion Rand equivalent. And it has cross-border related party transactions in aggregate more than 100 million. Then country by country report, the master file and the local file would be applicable. Now, this is the part where I spoke about earlier, where mandatory or where penalties and interest for the non-compliance element of not having the documentation would be applicable. All right. The next part is where we have a South African entity. It's part of a multinational group. It's also in excess of 750 million euros. And we have cross-border related party transactions in excess of 100 million. In this case, the South African entity is not the ultimate parent, but it's been, it's been delegated to submit the CBCR in South Africa. Then again, all of those requirements would apply. So just on the 100 million threshold, how that is met. It's met by aggregating all relevant cross-border related party transactions without netting the transactions off against each other. So if I have purchases and sales, I aggregate the two together, not net it off. It's also, what's also included in that 100 million is the capital balances of any funding transactions, loans, for example, etc. And dividends are also included in that 100 million threshold. Right. The next scenario that we deal with is where we have a South African entity. It's part of a multinational group. The group has consolidated turnover of more than 750 million euros, and the cross-border related party transactions are in excess of 100 million Rand. In this instance, it's where the CBCR would just be a disclosure as part of the corporate tax return, but I will have a mandatory master file and local file applicable that is to be submitted with the corporate tax return. Right. The second last scenario here is where I have a South African multinational. It's part of a multinational group, and consolidated turnover is less than 750 million euros, but my transactions are more than 100 million. I don't have CBCR. I don't even have the CBCR notification in the corporate tax return, but I do have the mandatory master file and local file because of that 100 million threshold. Right. The last scenario that I just want to end this off with, and this is the one that's causing a bit of confusion at the moment, is where transactions are below the 100 million threshold. Our income tax legislation still states that the onus of proof is on the taxpayer to substantiate the arm's length nature of the transactions. So this is what makes it a little bit difficult, because you still have to have some type of information to substantiate those transactions. So in this instance, it's advisable to take a bit of a simplified approach and at least still consider the transaction with a form of documentation being kept in respect of that. All right. So then just moving into some of the countries that we have from an Africa perspective. And I'm really just for the moment going to give an overview of these countries. Unlike South Africa, a lot of these countries are still in the startup of introduction of some transfer pricing regulations and legislation. However, there is a lot of movement at the moment in respect of transfer pricing within these countries as well. So just starting off with Botswana at the moment, transfer pricing regulations became effective on 1 July 2019 and has its application from the 2020 financial year. It broadly follows the OECD guidelines, and they've adopted quite a lot of the approaches that we have from a South African perspective. Penalties and interest will be applicable for not having documentation, and also if there's adjustments to transactions. Then from a in-country perspective, just in terms of CBCR, the master file and the local file approach, similar adoption as to South Africa. However, with the master file, local file, and the transfer pricing documentation, there's no mandatory threshold at the moment. However, it has been indicated that if controlled transactions are more than 5 million Botswana pula, then a master file of the group has to be provided to the Revenue Authority. All right. The transfer pricing in country is applicable to both domestic and cross-border related party transactions. And then again, they've enhanced their corporate tax returns with specific disclosures in respect of transfer pricing. Just on Botswana, the documentation is to be submitted within 6 months after the year end of the entity in Botswana. All right. Then on Nigeria side, there has been a revision to their transfer pricing legislation, and regulations were introduced 12 March 2018, and it's applicable to years commencing after that date. It broadly follows the OECD guidelines and also the UN transfer pricing model. And local legislation and regulations will prevail if there's any inconsistencies with the OECD guidelines or the UN model. Again, penalties and interest can also be applicable in respect of not having documentation, and also in respect of transaction considerations. So from a Nigerian perspective, a lot more has been introduced from a CBCR master file and local file approach. CBCR specific regulations has been issued. Master file and local file requirements and the specific details to that has been updated, and also forming part of the legislation and regulations at the moment. a threshold for your transfer pricing documentation has been set in Nigeria, and that is related party transactions that are in excess of 300 million Nigeria naira. That would have mandatory transfer pricing documentation applicable. It's also applicable to domestic and cross-border related party transactions. They've also enhanced their corporate tax returns with specific transfer pricing disclosures. APA consideration or advanced price agreements, that is being considered from a Nigerian perspective. However, these things do take some time before they are put in place. And then one key thing just to take note of from a Nigerian perspective is the NOTAP approvals. So that stands for the National Office for Technology Acquisition and Promotion. So this puts on record agreements for certain related party transactions. And without that process, one would struggle to get payments out of the country for the relevant services. So that's just an important element that kind of goes hand in hand with the transfer pricing considerations to consider from a Nigerian perspective. There's also been a transfer pricing case in Nigeria, and this was Prime Plastic Chem Nigeria Limited versus FIRS, or yeah. So in this instance, the Revenue Authority actually won the case. And what happened in this case, it's a local entity that is involved in the trading of imported plastics and petrochemicals. So it's effectively a distributor in the Nigerian market. A certain transfer pricing method was followed in the 1 year, and then that was changed in a following year. So a cup method was used in the 1 year, and then they changed to a transactional net margin method with a profit level indicator of operating margin, which is not out of the ordinary for distribution entity that you would often find. The Revenue Authority, however, argued that the profit level indicator should have been the gross margin, not the operating margin, and that led to a 1.7 billion Nigerian naira adjustment, plus minus 4.4 million US dollars. And again, here, the importance coming out of the case is really having documentation and having support for the transfer pricing transactions, and be able to support the transactions whenever it is scrutinized by the revenue authorities. All right. So if we move on to the next two countries, so here we're going to have a focus on Zambia and Zimbabwe. Just in terms of Zambia, there's been revised transfer pricing legislation and regulations in April of 2018, and it's applicable from the 2018 year. Broadly follows the OECD guidelines, the UN model, and again, if there's contradictions with the local legislation and regulations, that would prevail over the OECD guidelines and the UN model. Penalties and interest can again be applicable, both documentation and then on the transaction side. So here, CBCR, master file and local file has not been adopted as of yet. However, there has been indication in the 2021 budget that they are going to introduce considerations for CBCR purposes. Currently, companies with a turnover of more than 20 million local currency must file contemporaneous transfer pricing documentation. Like I said, they do not follow the master file, local file approach. So, you know, the question there is how contemporaneous the transfer pricing documentation would need to be. It's applicable to domestic and cross-border related party transactions. A change is, however, recommended under the 2021 budget to increase the 20 million turnover to 50 million. So that would take out some of the companies being required to submit documentation. and it will only be applicable to multinational enterprises. All right. And again, here also, there's specific disclosures that's part of the corporate tax return. So in Zambia, there's been two transfer pricing cases, one involving Nestle and the other one, Mopani Copper Mine, which is actually part of the Glencore group as well. So in the Nestle case, this is actually a very interesting case. Nestle won the case. It was a very interesting approach that the Revenue Authority took, and there was various angles and considerations that they looked at. The main element being that the Revenue Authority wanted to reclassify the Zambian entity as a limited risk distributor, even though if you look at the entity and you look at what the functions are that the entity actually performs, you would see that it is actually a fully fledged distributor. So yeah, there was a lot of questions being asked, but the taxpayer was able to win that case at the end of the day. The next case was, like I said, the Mopani Copper Mine, also versus the Zambia Revenue Authority. And in this case, there was an adjustment that was made of 240 million local currency, plus minus $13 million. And here, the audit that was conducted found that sales to related parties were actually at a lower value than sales to third parties. And that led the Revenue Authority to making those adjustments. And here the Revenue Authority actually won that case. So again, these two cases, I would say, is just important and highlights the fact that you need to be able to substantiate your transactions. So if we move on to a Zimbabwean element, revised transfer pricing legislation and regulations has been introduced in January 2019, and it's applicable to years of assessments after these dates. It follows the OECD guidelines and the UN transfer pricing model. And again, if there's local legislation that will prevail over those guidelines. Penalties and interest can be applicable. Country by country reporting, master file, local file, there's no adoption of that at the moment. No mandatory documentary thresholds, and it's applicable to domestic and cross-border related party transactions. And in Zimbabwe, there's actually no specific disclosures in the corporate tax returns from a transfer pricing perspective. Again, in Zimbabwe, there's been two cases from a transfer pricing perspective. First one is CRS Pty Limited versus the ZIMRA. And here the Revenue Authority actually won the case. And in this one, this actually involved a South African entity, and it was logistical service provider, and there was various transactions happening between the related parties. However, in this case, the taxpayer did not have substantive documents that could support the pricing of the transactions, the thinking behind the transactions, etc., and that led to adjustments being made by the Revenue Authority. There was also a case with Delta Beverages versus ZIMRA, the Zimbabwe Revenue Authority, and here the taxpayer won the case. So this actually covered quite a number of years from a transfer pricing perspective. It took the approach 2009 to 2014, and certain related party service fees were disregarded, royalties, technical fees, etc. And that led to about a $42 million adjustments. And here again, you know, the taxpayer at least had sufficient documentation, etc., that it could substantiate the transactions with, which led to the taxpayer winning this case. Right. Just moving on to the next two Africa countries. Kenya has had transfer pricing legislation and regulations from 2006. Updates have been proposed under the 2018 tax bill. It's not been implemented as of yet. It again follows the OECD guidelines and the UN transfer pricing model. Penalties and interest can again also be applicable from both documentary and transaction perspective. Country by country reporting master file, local file has not been adopted as of yet. No mandatory documentation thresholds. It just says that contemporaneous transfer pricing documentation has to be kept, and it's applicable to domestic and cross-border related party transactions. And as with Zimbabwe, there is no specific disclosures in respect of the corporate tax returns. So here was also a case in Kenya, and this actually led to the introduction of transfer pricing legislation in Kenya in 2006. And this was a Unilever case. And here it was also found that goods were sold at a bit of a lower price to related parties than to third parties. And in this case, the Revenue Authority also won this case from a Kenya perspective. So just in respect of Mozambique as transfer pricing legislation and regulations that were introduced January 2018 and applicable to years commencing after this date. The OECD guidelines and UN transfer pricing model is not accepted from a Mozambique perspective. Penalties and interest is also applicable. There has been no adoption of CBCR master file local file, and the mandatory documentation threshold from a Mozambique perspective is 2.5 million metica, or about $35,000. And it's applicable to domestic and cross-border related party transaction, and the transfer pricing documentation in Mozambique has to be in Portuguese. And there's also specific disclosures that's part of the corporate tax return. So the last two Africa countries that I'll end off with before we quickly touch on some of the Middle East countries is Ghana and Tanzania. So Ghana, there's been transfer pricing legislation and regulations from 2012. It's applicable for years commencing after this date. There hasn't really been any recent updates, and it follows the OECD guidelines. Penalties and interest, again, also applicable here. Country by country reporting master file and local file has not been adopted or is not applicable. There's no mandatory documentation threshold. It just contemporaneous documentation has to be kept, and it's domestic and cross-border related party transactions with specific disclosures in the corporate tax return. Here was also a case in Ghana. There was Beiersdorf, Ghana versus the GAR, or the Ghana Revenue Authority. And here the Revenue Authority won the case as well. And a big key thing out of this case was a royalty that was paid for the use of the Nivea brand, where the local revenue authority actually disallowed that payment and that expense, because the agreement did not go through the Ghana Investment Promotion Center, which is again similar to the NOTAP that we mentioned before with Nigeria. The agreement has to be approved for that payment to be taken into account. And that led to the Revenue Authority winning the case here. Then in Tanzania, there's transfer pricing legislation and regulations from 27 April 2018. It's for financial years after that date. There has been an update to the transfer pricing guidelines that were issued in July 2020. It follows the OECD guidelines and the UN transfer pricing model. Penalties and interest can be applicable here as well. From a CBCR master file, local file perspective, it's not applicable and not been adopted. No mandatory documentation threshold. However, transfer pricing documentation has to be submitted with a corporate tax return for entities that have transactions in excess of 10 billion local currency. It's applicable to domestic and cross-border related party transactions, no specific disclosures in the corporate tax return, and there is then an indication that APAs or advanced pricing agreements are being looked into. However, they first need to develop some more in-country capabilities in this respect. So then moving on to a Middle East perspective, and here we're really just going to focus on four countries. So we have the UAE, Oman, Qatar, and Egypt. From a UAE perspective, there's no specific transfer pricing legislation or regulations. However, regulation has been issued for the jurisdiction by jurisdiction report for multinationals. And what this basically refers to is a country by country reporting adoption that's been made. So where CBCR reports would have to be submitted in country, and there is also sharing of that with other countries. BEPS Action 13 hasn't been adopted in terms of master file, local file, but like I said, there is standalone CBCR legislation and regulations. Penalties and interest can be applicable for not complying with the CBCR requirements. All right, and the CBCR regulations came into effect in June 2018. Then from a Oman perspective, there is an income tax law that was issued by the Royal Decree, which contains certain specific transfer pricing provisions. It follows the OECD guidelines. It hasn't adopted BEPS Action 13 in respect of CBCR master file or local file. Appropriate documentation from a transfer pricing perspective is expected, and you have 30 days to provide that under a tax audit or investigation. That 30 days can differ as well if there is a longer term that's been agreed with the revenue official. There's no mandatory requirement for documentation. Corporate tax returns have specific disclosures in respect of transfer pricing, and there's no specific penalties and interest that's been indicated as of yet. So then the last two countries, from a Qatar perspective, there's income tax law that contains certain transfer pricing provisions, broadly follows the OECD guidelines, and it has adopted Action 13 as of May 2020. So further guidance is, however, still to be issued in respect of the CBCR master file and local file approach. And here also it has been indicated that APAs could be considered in future. So CBCR specific regulations has been in place from September 2018 and applicable to years commencing 1 January 2017. Master file, local file has also been adopted under the new approach from May 2020. However, clearer guidance is still to be issued in respect of the content and the approach or the thresholds to the transfer pricing documentation. Right. And the submission of the documentation would be required with the corporate tax return. So then just to end off this first part, before I just make a closing comment, if we look at Egypt, income tax law with specific transfer pricing provisions, it follows the OECD guidelines, and transfer pricing specific guidelines has also been issued in October 2018. BEPS Action 13, the CBCR master file, local file has been adopted and applicable from years starting 1 January 2018. There's specific corporate tax return disclosures in respect of transfer pricing, and APAs can be considered. So there is CBCR master file, local file with specific CBCR regulations. Master file and local file, there's no threshold to keep that. And from an Egypt perspective, submission of the transfer pricing documentation has to be within 2 months from the corporate tax return submission. Okay, so it's a very short period there. Then just to end it off, and this is something that is currently affecting a lot of businesses from an international but also local perspective. And that's really just a comment in respect of transfer pricing and the COVID-19 pandemic considerations. A lot of revenue authorities across the globe are under pressure for tax collection. A lot of funds from the government budgets had to be reallocated to certain specific requirements to assist with relief under the COVID-19 pandemic. In South Africa, it's already been indicated that transfer pricing and the focus on international tax transactions and multinationals would be further enhanced going forward from a South African perspective. And that's purely because the Revenue Authority, they're looking for spots where they can make up tax collections that, where funds were utilized for other areas during the COVID-19 pandemic. So it is a very real thing. And the recommendation here would just be for multinationals to ensure that you appropriately look at transfer pricing documentation, appropriately look at transfer pricing policies, agreements, the approach to the transactions, and also that the economic analysis or the benchmarking is enhanced with the specific considerations. So that would be my closing comments just on this. What we will include in the slides when it's available to share is links to the various country websites, just for some more information on the transfer pricing requirements, and then also some links to the cases that we touched on in here as well. All right, so that is that from my side, and then I'll revert back if there's any questions.
Well, thank you very much, Charles, for providing us with that, I think, good contextualization and setting the scene for the more specific presentations that we're about to go into in our breakout sessions. I see people have been a little bit shy today, so no questions coming through on the moment. But I believe, and I'm a bit cognizant of time, but I believe, or I encourage everyone to please ask your questions when we go through to the sessions. So I'm just going to quickly go through how that will work for everyone. But once again, thank you very, very much, Charles, for lending your expertise here today and providing us with that general overview. There has been a question that's come through, and I just want to assure everyone that we will distribute the slides following from this presentation. So just have a look out for that on your email. If not, please contact your relevant chamber director and they will be able to assist. And of course, if you have any questions related to Mazars, please do send that through and get in touch with your respective chamber or business club on that one. So thank you very, very much, Charles, on transfer pricing. And particularly, I think, I'm sure there'll be a lot of questions coming through as well on the current context and what to do. So I know you guys will be on hand, the experts will be on hand to answer any of those questions. All right, perfect. So on to the part 2 of our session is going to, of course, be the breakout rooms. When you did register, you would, of course, registered for a specific country, whether it's in Africa, Egypt, Middle East, Zambia, Botswana. So what will happen quite in the next few moments is that you will get a pop-up screen and you will break into your specific country room. In that room, there will be a Mazars expert who is going to, in more detail, run through the specific requirements, as well as you will be joined by the CCI director of that country or the head of the French Business Club as well. So this is really provides a more informal opportunity for you to engage one-on-one, have your questions heard, or to give your comments and really engage in a more informal setting. So please, once again, I do encourage you to ask all your questions. The Mazars experts across the region, more than 10 countries, are here and available to answer any of your questions, as well as the CCI directors. It's always useful for you to know who they are in the specific countries. So please do ask them questions about any business-related things regarding members or investment in those certain countries. We're here to help. So please do take advantage of that opportunity now. So in a few moments, my colleague Guillaume is going to break into the rooms. If there are any issues that do arise, please just use the chat or unmute yourself and you can ask the CCI director. They will assist you if there are any issues. I'd like to ask for your patience. There's more than 100 people present here today. So the breakout rooms will take just a few moments just to distribute to everyone. So please do be patient on that one. And then I think this, for those attending outside of the South African session, this will be the last time you see me. So I just want to say a big thank you once again to all of our participants today. Of course, a big thank you to Mazars, to Sebastian, and of course our fellow sister chambers around Africa and Middle East. It is phenomenal for us to be able to collaborate together on this event, and we look forward to many more opportunities where we can pool together our information, our expertise, and really assist in making sure that we grow our businesses in our respective countries and really leverage what we can do across the African continent and as well in the Middle East. So a big thank you to everyone, and I would like you to take you through to the breakout sessions now. So please enjoy wherever you are joining in from here today. It's great to be all connected together. And once again, thank you for participating, and keep well.